Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of finance with a smirk and a whole lot of common sense. Today we're diving into a document that sounds a bit like a warning siren for Neuphoria Therapeutics. It's all about a potential stumbles in keeping their stock listed on a major exchange. So what's going on with Neuphoria Therapeutics? Well, it seems they've received a bit of a notice from Nasdaq, the big stock market, telling them they might not be following the rules for keeping their shares available for trading. This is pretty important because if companies don't play by the rules, their shares can get delisted, meaning they become much harder to buy and sell, which is definitely not good for investors. The filing we're looking at is dated July 18, 2025, and it's called a Form 8K. Think of an 8K as a special report that companies have to file when something big and important happens, like a major change or a problem they need to tell everyone about right away. This particular 8K is all about something called Notice of Failure to Satisfy a Continued Listing Rule, or Standard Transfer of Listing. That's a mouthful, but it basically means Nasdaq sent them a letter saying, hey, you might be on the verge of not meeting our requirements to be listed here. Neuphoria Therapeutics, the company in question, is in the business of developing new medicines and treatments. Like many companies in this space, they need to raise money through selling shares to fund their research and development, which can be a long and expensive process. Being listed on a major exchange like Nasdaq is crucial for that. The issue at hand seems to stem from a rule that requires companies listed on Nasdaq to hold an annual meeting for their shareholders. You know, the people who own a piece of the company every year. More specifically, they need to hold this meeting within a year after their fiscal year ends. Neuphoria's fiscal year ended on June 30, 2024. The problem is that Nasdaq's listing qualifications staff sent them a letter because they didn't hold their annual shareholder meeting within the required time frame after their fiscal year ended in June 2024. Nasdaq's rule 5629, is pretty clear. You need to have that yearly check-in with your owners no later than 12 months after your fiscal year wraps up. Now, Neuphoria is saying, hold on a second, we usually do hold our meetings around November or December, and we even had a big one in December 2024 for a company restructuring. They've already planned their next annual meeting for around November 2025. So they believe they're on track to fix this issue, especially since they'll be submitting a plan to Nasdaq to show how they'll get back into compliance. The clock is ticking though. Neuphoria has until September 1, 2025 to submit a plan to Nasdaq that explains how they'll get back in line with the listing rules. If Nasdaq accepts this plan, they could give Neuphoria an extension up to 180 days from the end of their fiscal year, which would be until around December 29, 2025 to fix the problem fully. The good news for investors right now is that this notice doesn't mean their stock is delisted today. Their shares are still trading on Nasdaq as usual. However, it's definitely a situation to keep an eye on. Companies that can't meet listing requirements often face increased scrutiny and potential consequences. The report also includes what are called forward-looking statements. These are basically statements about what the company expects to happen in the future. Things like their ability to keep their stock listed on Nasdaq and other potential challenges. It's important to remember that these are just predictions and actual results can be very different due to various risks and uncertainties. The company is essentially saying, we're trying our best, but there are things that could go wrong. They also mention they might not update these statements if things change, which is pretty standard legal language to protect themselves. There's also a mention of an Exhibit 104, which is the cover page interactive data file. This is part of a system called In9XBRL, which makes financial information in these filings more searchable and accessible. It's like a digital layer on top of the report that computers can easily understand. The report is signed by Spiridon Papatropoulos, who is identified as the Chief Executive Officer of Neuphoria Therapeutics. This is the top executive of the company, so he's the one ultimately responsible for ensuring the company follows all the rules and regulations. The date of the signature is July 18, 2025, matching the report date. Now let's think about what this means for Neuphoria Therapeutics. The core issue here is a procedural one, failing to hold an annual meeting on time. While this might seem like a minor administrative screw-up, it can have significant implications. Nasdaq has strict rules to ensure that companies are transparent and accountable to their shareholders. Missing a deadline like this can signal potential weak internal controls or management oversight. From a business perspective, staying listed on Nasdaq is vital for Neuphoria. It provides access to capital, makes it easier for investors to trade their shares, and lends credibility to the company. If they were to be delisted, it would be much harder and more expensive to raise funds for their critical research. This could slow down their progress in developing new therapies. We don't have a lot of detailed financial tables in this particular filing as the focus is on the listing issue. But the underlying health of Neuphoria's finances is always important. Companies in the biotech and therapeutic sector often burn through a lot of cash during the research and development phases, relying on investment to keep going. A hiccup in their listing status could make it harder to attract or retain that investment. Looking at the company's overall situation, the fact that they've had a meeting each year in the past is somewhat reassuring, suggesting this might be an oversight rather than a fundamental problem with shareholder engagement. However, the risk still exists and investors need to trust that management has a solid plan to get back into compliance quickly. The strategy here for Neuphoria should be clear. Submit a robust plan to Nasdaq that details exactly when and how they will hold their missed annual meeting and any other upcoming meetings. They also need to demonstrate that they have systems in place to prevent this from happening again. The fact that they aim to file their annual report by September 30, 2025 and follow up with meeting communications shows they are aware of their obligations and are moving to address them. The biggest risk for Neuphoria right now is the uncertainty surrounding Nasdaq's decision on their compliance plan. If Nasdaq is not satisfied, or if there are further delays, it could lead to a delisting. This would significantly impact the company's ability to access capital and its overall market standing. In conclusion, while Neuphoria Therapeutics has encountered a procedural hurdle with Nasdaq's listing rules, they seem to be taking steps to rectify the situation. The key will be their ability to present a convincing plan to Nasdaq and execute it effectively. Investors should monitor upcoming filings and announcements closely for updates on their compliance status. Alright, that's our breakdown of Neuphoria Therapeutics' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.